Can chime in with anything you might want to say. Just use the hashtag there at the bottom of your screen for Twitter. You can also email us yourmoney@skynews.com.au. Let's start with one of the major stories, well, the major story, Julia, of the day. Banks very much under pressure. A little bit of a roller coaster ride for them, of course, all around this speculation around a bank levy. Let's call it what it is, a bank tax. What have you made of it all?
It hasn't been good news for the banks. The banks have been sold off very sharply. ANZ down by 1.2%. We've seen NAB losing 1.6%. Commonwealth Bank down 1.5%. It is over media reports about a new bank levy. At the moment, we do see current deposits of sort of under 100, current deposits under $250,000 being guaranteed by the government, and that's if your deposit is with a bank. It looks like the levy may be between 0.05 to 0.01% on deposits of up to $100,000, and that's protected deposits. But we'll have to wait till tomorrow to see the details of that. But of course, if we have a look at the banks, they are in an environment where we haven't seen massive profit growth coming through. We've seen profit growth of between 3 to 5%, and really the bank's share prices have been rising because of this chase for yield and because they are relatively high yielding investments. So it's not because we're seeing strong growth in profits that we've seen the share prices run, more that we have seen the dividend yields looking quite attractive. Westpac was a little bit sheltered from the losses that we saw in the banks today, and that's because we've seen a number of upgrades flow through for Westpac over the past week. We've seen Deutsche Bank raising its rating to a buy from a hold. We've also seen JP Morgan with an overweight rating from a previous underweight rating, and also Macquarie raising to an outperform from a neutral recommendation previously. So Westpac a little bit sheltered, but unfortunately some speculation around a new bank levy. Not good news for the big four banks.
The Aussie dollar and the charts with the Aussie and the equity markets. With that sliding Aussie dollar, we've got it around, I think, 89.7, 89.6 US cents. Who do you see as the big beneficiaries?
The Aussie dollar's under 90 US cents, and we've been talking about the slide in the Aussie dollar for a long time now. And if we have a look at what stocks really benefited, we did see some of these stocks rising quite significantly today. We saw Macquarie Atlas up by 1.8%. Now this company is involved in toll roads, and 5 out of the 6 toll roads that they own are actually offshore. So the stock actually up 38% in the year to date. You usually don't expect to see much capital appreciation in terms of these toll road operators, but Macquarie Atlas doing extremely well. QBE Insurance, an obvious one, that stock was up by 1.8%. It's up 53% in the year to date. It gets about 40% of its gross written premiums from North America, so it's a beneficiary of the currency move. Bramble's up by 2.4% today. It's up by 24% for the year to date so far. It gets about 36% of its revenue from Pallets America, so big exposure to the US dollar. ResMed, about 70% of its costs are in Australian dollar terms, and then it sells in foreign currency, so a positive there. That stock up by 3.1% today. And Woodside Petroleum as well, it sells in US dollars, so positive there, as with a lot of miners, and Woodside Petroleum was up by 1.8%. Of course, if you don't want to look at individual stocks, one of the strategies we've been talking about for a while is exchange traded funds. And some of these exchange traded funds, which actually track overseas indices, reaching 52-week highs as well. We saw AVV, which tracks the S&P 500 index in the US, hitting a 52-week high. That's up by 18% in the year to date. Also the one that tracks a mid-cap index in the US, that's up around about 21% in the year to date, also hitting a 52-week high. And we saw the global healthcare index, that's IXJ, also hitting a 52-week high today and up by 22%. You can also trade currencies on the ASX now as well. So Beta Shares has a US dollar, or POU, that's the US dollar, or the Great British Pound. They're up 16% and 9% respectively, so doing quite well in this type of environment. So the falling Aussie dollar is definitely a very strong theme this year, and you can play it through stocks, you can play it through exchange traded funds, or you can play it through currencies which can be traded on the ASX as well.